Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. While markets are looking forward to the second half of the week, where there are market moving data points like the US PCE, GDP, amongst a few, the data coming out of the recently from the European Union hasn't been inspiring. German GDP came in at 0% year on year, but what's interesting is that it was majorly supported by government spending. If there was no government spending increase or increase in inventories, the print would have looked a lot worse. Good morning, JK. How are you reading the German GDP print? Does this increase the odds of more supportive measures from the ECB?
Yes, definitely, Swaraj. I think Germany is now being called the sick man of Europe, and we are seeing consistently, weaker numbers from Germany, and the GDP data for Q2 coming at minus 0.1 on a quarter-on-quarter basis raises concerns of a recession again. And as you said, without the government spending and also the inventory levels of both of them add to the GDP, the number would have been even worse. And what the market will be nervously looking forward to is how the Q3 is going to, pan out. Yes, euro has been gaining, but by default due to weakness of the dollar and the dovish statements from Powell. But if the dollar starts some reversal to the upside, I think euro will be hard hit. Yeah, on the other side, in the market yesterday, in the last 2 days, we did not have too much of data, but yesterday we did have consumer confidence data. That was quite, strong number coming, much higher than expected, and that that really did not move the market much because market is looking forward to much more important events like the GDP, PCE, and also tonight it starts with the NVIDIA's results, where markets are actually positioned for a good number, but there are concerns that it could disappoint, and that can see a bigger sell-off in the market. Speaking of sell-off, I think we had a very nervous sell-off in the Bitcoin overnight, and it has fallen up more than 5%. Some people see sell-off in the Bitcoin as a precursor to a general risk liquidation, but it's a bit too early to say because it's also slightly recovering. But with so many events ahead, I think market will be in a consolidation mode for today's session as well. Not much movement will be seen. On the yields, what we saw was that near-term yields have been going down because of increased conviction that Fed will be cutting rates in September, whereas the long-term yields are somewhat up. So there is a steepening of the curve. Demand is shifting to the short term because it's a very attractive yield above, at around the 4%. So that keeps the bond market strong. On the stocks, I think it's still in a consolidation. The currencies, we did not make a new high either for the euro or for the risk currencies. But some of the currencies have stood out. Australian dollar has broken 68 once again based on stronger CPI number, as we have all been seeing. The Australian Central Bank perhaps is the next one after Japan to be hawkish because their inflation has not come down, and but it's not actually to be a good position in because the growth is not so great, but inflation is higher, so Australian Central Bank maintains a hawkish stance as well. But overall, dollar did see only a consolidation. Euro attempted to break 1.1190, but that did not happen. So more consolidation, but any positive news or rather, higher inflation number or better than expected GDP number can lead to, squeeze on the dollar shorts, particularly against the euro and the GBP. Both of them or have rallied very hardly in recent times. Another thing to look forward to is the yen, which is not able to sustain any move above 145. Looks like a lot of sellers are waiting there, having missed out earlier, and now any recessionary news from US will be bad for the dollar yen, which can slip much more and lead to broader risk sell-off. So a lot of possibilities as we head into the key data, and we should remain quite nimble in the market. Rupee, yes, I mean nothing new. Again, we are trading comfortably above 83.90. Perhaps the central bank holding below 84, while it is seems to be very strong approach by them, but any deterioration in the risk sentiment in the global market, and more unwinding on yen-based positions can lead to central bank relating on the upside as well, but downside definitely remains solid at 83.75. Thin market, quiet market, but a lot to look forward to. Even after this week, we have the non-farm payroll number on September 6th, and normally that marks the end of the vacation for most of the Western world, and we should see a very active September when I think some real good trendy moves should emerge, particularly for the currency markets.
Thank you, JK. And just quickly summarizing, Germany's sick man of Europe status continues to put pressure on the ECB to act soon. Consumer confidence from the US, however, continues to remain strong, though it did not move markets. Tonight, we have NVIDIA's results, and for the stock watchers, the company has been leading the AI race. And when it comes to bonds, near-term yields have been going down as there's increased conviction that there will be a rate cut soon, while the longer end has been stable or rising. So somewhat there's a steepening of the curve, which has started. Currencies generally have been consolidating at stronger levels against the dollar as markets await more data. Nothing home to write about rupee. Rupee continues to trade above 83.90 very, very comfortably. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.